Welcome to DebtCircle Key Roundups. I am Vijender.
And I am Leela.
Today we've got some major developments shaping India's lending, infrastructure and fixed income markets. From PVP Ventures setting May 19th, 2026 as the record date for interest payments on its non-convertible debentures worth Rs 250 crores to Tourism Finance Corporation of India, reporting a profit after tax of Rs 123 crore.46 lakh and securing approval for a Rs 1,200 crore fundraise. There's a lot for investors to track today.
Absolutely, Vijendra. And we're also seeing strong momentum in regional MSME lending, with flexi loans targeting cumulative disbursements of Rs 200 crores in Jaipur by the end of 2026, after already crossing Rs 150 crores. Their hybrid field on street and digital underwriting strategy is becoming a major talking point in Tier 2 and Tier 3 credit expansion.
Staying with debt markets, PVP Ventures confirmed that interest payments on its non-convertible debentures under ISIN's INI 362A07054 and INI 362A07047 will be paid on May 20, 2026. This timely servicing reassures investors at a time when real estate and infrastructure firms increasingly rely on bond financing to maintain liquidity and expansion plans.
And investors will definitely keep monitoring disclosures around repayments and financial health, because consistency in debt servicing is critical for market confidence. Companies using non-convertible debentures as funding tools are under constant scrutiny regarding cash flow discipline and long-term repayment capacity.
Now shifting to Tourism Finance Corporation of India, the company reported a 19% rise in fiscal 26 profit after tax to Rs 123 crore.46 lakh while maintaining a very low gross non-performing asset ratio of 0.37%. Alongside this, the board approved plans to raise Rs 1,200 crores and recommended a dividend of Rs 0.60 per share.
That combination of profit growth, strong asset quality, leadership continuity, and fresh capital gives TFCI a strong platform for expansion in tourism infrastructure financing. Investors will closely watch whether the company can maintain low NPAs while deploying larger capital into a sector that's seeing renewed demand across hospitality and travel-linked infrastructure.
Meanwhile, Pune secured Rs 1,290 crores from the Urban Challenge Fund, including Rs 890 crores for water supply projects and Rs 400 crores for flood control initiatives. The program includes a 200 million liters per day treatment plant, smart monitoring systems, drainage upgrades across 335 flood-prone locations, and infrastructure expected to support nearly 8 lakh residents through 2052.
And what's interesting here is the financing model itself. This isn't just grant-based urban spending anymore. It's reform-linked, market-oriented funding focused on governance quality and investment readiness. Pune's approach could become a benchmark for climate-resilient infrastructure financing across Indian cities.
In the corporate fundraising space, NHC Food secured over 99% shareholder approval to raise up to $27 million, roughly Rs 225 crores, through qualified institutional placement and foreign currency convertible bonds. The company also increased its borrowing limit fivefold from Rs 100 crores to Rs 500 crores.
That comes after impressive operational numbers, including a 62.21% rise in revenue and a 185.18% jump in net profit in fiscal 25. However, investors are still watching concerns like negative operating cash flow, debtor days of 174, and how effectively the company manages rising leverage while funding expansion and diversification.
Adani Power is also back in the debt markets, planning to raise Rs 8,000 crores this year through domestic borrowing, including Rs 5,000 crores via public bonds and Rs 3,000 crores from a consortium led by State Bank of India. The company aims to scale capacity from 18,000 megawatts to 41,870 megawatts by fiscal 2032.
That aggressive expansion reflects India's growing electricity demand, but it also highlights how important long-term financing and credit quality have become. With a AA credit rating and a recent Rs 7,500 crore bond raise already completed, Adani Power is positioning itself strongly in the evolving fixed income landscape.
IDBI Bank is also planning a significant capital raise, with proposals to issue up to Rs 10,000 crores through long-term rupee bonds for infrastructure and affordable housing financing. The board is expected to review the proposal on May 16, 2026, as the bank looks to strengthen lending capacity while maintaining prudent leverage management.
And alongside that, India's securities regulator is proposing major reforms for the municipal bond market, including mandatory refinancing disclosures, limits on working capital usage, pooled financing structures, escrow protections, credit enhancements, and even ESG-linked municipal bonds. These reforms could dramatically improve transparency and broaden investor participation.
On the housing finance front, LIC Housing Finance reported a March quarter profit after tax of Rs 1,497 crores, up 9% year-on-year. Gross non-performing assets improved to 2.1%, credit costs dropped sharply, and shares closed 3.3% higher at Rs 586.5 after the results announcement.
Though the earnings beat was encouraging, loan growth remained relatively muted at 4.2% annually, and return on average equity declined to 14% from 16%. So while risk management has improved significantly, investors still want to see stronger business expansion going forward.
Global bond markets are also influencing sentiment. Indian government bond yields remain steady for now, with the 6.48% 2035 bond expected between 7.02% and 7.08%. But elevated crude oil prices and the US 10-year Treasury yield touching 4.50% continue to pressure emerging markets.
Exactly. Since India imports nearly 90% of its crude oil, persistent high prices could fuel inflation, weaken the rupee, and widen the current account deficit. Markets are also closely tracking US-China developments and the Reserve Bank of India's response to inflation risks.
In another major update, Housing and Urban Development Corporation Limited HUDCO retained its AAA stable rating from ICRA while its borrowing limit was increased to Rs 3,44,775 crores. That significantly strengthens its ability to fund government-backed housing and urban infrastructure projects.
But risks remain tied to state government finances and concentration exposure in specific regions. So even with strong sovereign support and high credit ratings, portfolio diversification and recovery quality will remain important for long-term stability.
CRISIL also reaffirmed TCI Express Limited's AA- stable rating for its Rs 100 crore bank facilities. Meanwhile, King's Infra Ventures raised fresh debt through secured redeemable non-convertible debentures. And Lakshmi India Finance approved issuance of up to Rs 400 crores in non-convertible debentures after reporting fiscal 26 net profit of Rs 49.76 crores.
These developments highlight how companies across logistics, infrastructure, and NBFC sectors are actively balancing growth ambitions with leverage management. Investors are paying close attention to debt servicing discipline, utilization of facilities, and whether operational cash flows can comfortably support expanding borrowings.
There were also significant promoter pledge developments today. Zenrock Chemicals pledged its entire 38.41% promoter stake in Indo-Borax and Chemicals, while VS Dempo Holdings pledged 55.39% of Goa Carbon shares to secure a Rs 50 crore loan from 361 Prime Limited.
Full promoter pledges are always closely watched because they can signal funding stress and reduce promoter flexibility. If repayment obligations are not met, lenders may invoke pledge shares, potentially affecting ownership structures, governance stability, and overall market sentiment.
India also sharply increased customs duties on gold and silver imports from 6% to 15%, and on platinum from 6.4% to 15.4%, aiming to protect foreign exchange reserves amid geopolitical tensions and elevated oil prices. At the same time, the Reserve Bank of India fixed the premature redemption price for sovereign gold bond 2018-19 Series 3 at Rs 15,102 per unit, delivering extraordinary long-term returns for investors.
And finally, we're seeing structural reforms across the financial ecosystem from RBI, allowing non-bank entities to partner with authorized dealer banks for outward remittances without prior approval, to SEBI planning specialized bond distributors for retail debt investors, and Canara Bank increasing marginal cost of funds-based lending rates by 5 basis points across tenors. Together, these developments show India's financial system becoming more market-driven, more transparent, and increasingly focused on balancing growth with investor protection.
That wraps up today's edition of the DebtCircle podcast. From bond markets and infrastructure financing to MSME credit growth, gold duties, and banking reforms, the financial landscape is evolving rapidly. Stay tuned for more market-moving updates, and thank you for joining us today.